Welcome to ETF Guide TV. I'm Ron DeLegge, and cryptocurrencies have been going bonkers. The performance of Bitcoin and Ethereum and all the altcoins, as they're known, have been just in tremendous run upwards. And we're joined by David Kreinces at ETF Portfolio Management. Dave, it's great to catch up with you.
Thanks, Ron. Great to see you.
So I just want to have a fireside chat with you about your thoughts about cryptocurrencies. You know, we've talked about this off the air, and you've told me repeatedly, and I'm not going to forget this, that this is a move that you don't want to miss. Tell us more about that.
You know, the investor community has really been shocked at the incredible wealth creation in the cryptocurrency space. When we look at what the Winklevoss brothers did, reportedly growing an $11 million seed to over $1 billion in roughly 5 years, it really shows investors that unexpected innovation can present opportunities that are outside our traditional expectations. And when you look at the returns in Bitcoin now attacking its all-time highs and the extraordinary growth in Ethereum, more and more investors, more and more institutional investors are rushing to participate.
Yeah. And so there's different coins, as you know. Of course, Bitcoin and Ethereum are the default leaders. There's lots of altcoins out there. I think about Bitcoin versus Ethereum as sort of like gold versus silver. How do you see it in terms of that particular battle between those two coins?
Well, I don't know if I can make the comparison like that, but I would say that the cryptocurrency space is still very early stage, and investors that want to participate should take comfort in knowing that these are the two largest cryptocurrencies by assets. And when you look back at the internet revolution, if you simply made sure that you had some participation in the handful of the largest disruptive players of that technological innovation, you would have done very well. So I think investors can, participate in both to some degree and take comfort that they're not going to miss out on future returns if they continue.
So when you say participate, a lot of people trade these currencies, and these are 24/7 markets too, by the way, which is pretty insane. So you could be sleeping, and while you're sleeping here in the North America, markets could be going bonkers in Asia or elsewhere. But when you say participate, are you saying trade cryptocurrencies, or are you saying buy and hold?
Well, at ETF PM, we do have active exposure to the Bitcoin Trust GBTC and the Ethereum Trust ETHE. And because of our position sizing, we do adjust the position based on the momentum of the securities. But for most investors, the vast majority of investors, we would strongly recommend a very small token, 1% allocation or even less, and reward success. So as that position grows exponentially, it's easy to add a little bit to it, but a small allocation can go a long way when you look at the compounding of these securities.
What about external factors like fiat currencies? I mean, let's not forget that's how the cryptocurrency movement began in the first place, was as an alternative to fiat currencies. I mean, you've got national debt here in the United States skyrocketing. And then when you add in, Social Security and Medicare liabilities, I mean, some estimates, I've seen them over $100 trillion. I mean, it's just mind-boggling, these types of numbers. And at some point, you got to think there's going to be some sort of reckoning day. You can only kick the can so far. And you got to wonder at what point will that impact things like the US dollar that could be supportive of higher cryptocurrency prices?
Well, all the trends seem to favor cryptocurrencies. And the fact that Bitcoin appears to have this firmly limited supply that the market is confident in, it really presents a unique asset that gives investors the opportunity to hedge against inflation and have the preservation of buying power that they might not have in most other asset classes. So right now, the market is really voting with dollars that this asset class is a very important, unique asset class for investors to engage. And investors that missed the parabolic move in 2017 shouldn't be surprised if Bitcoin hits a new high very soon and surpasses it exponentially like many investors expect.
So maybe we should wait for a pullback before jumping in. What do you think?
You know, when most investors make a small allocation for a buy and hold asset class like Bitcoin, I think the speed of the entry is more important than the timing of the entry, because if you were in the middle of 2017 and you waited, you missed massive upside. Obviously, it's come lower since then, but the investor never knows if they're going to have another chance. And when you look at the long-term potential for Bitcoin, for a 1% allocation, I think it's more important to get your participation in the game than to try to time the entry.
What's the most ridiculous Bitcoin forecast that you've heard?
Well, there have been predictions well north of, I don't know, a million Bitcoin, Bitcoin rising to $1 million, and the market cap for Bitcoin to exceed, gold and perhaps multiples of gold. So I think no one can really take any confidence in any of these predictions. But when we look at the price momentum that we've seen up until now, GBTC as an over-the-counter Bitcoin trust is one of the very few securities that we can find that has outperformed NASDAQ 100 three times TQQQ. So when you look for diversifying growth investments that can keep up with 3 times NASDAQ 100, there's very, very little to choose from. And
it's done that without leverage too. I mean, how bonkers is that?
It's mind-blowing. And it didn't just beat TQQQ, it torched TQQQ. And TQQQ
I can't believe you're saying this. You're such a heretic. For such a TQQQ fan, for you to say this is heresy.
Well, it isn't, because we're trend followers. So we're just following the math. We're following the momentum. And the price action for Bitcoin justifies the excitement. So in our most aggressive portfolios, we have as much as a 20% allocation to Bitcoin through GBTC and as much as a 5 to 10% allocation to Ether. And we'll turn those positions off very quickly when they move against us. But the momentum in place today is very favorable.
And so have you played Bitcoin marketplace or cryptocurrencies? Obviously you talked about the securities exchange or securities listed way to play that. And of course, you can buy and sell that when markets are open. You can also opt for trading the coins directly on exchanges like, Coinbase or whatever. And so have you dabbled in that on that side of the market in terms of like the actual coins themselves? Have you ever done that? Because I have. I'll tell you how my experience went in a second.
I did make an effort to open a Coinbase account, and I ultimately decided to pursue our exposure through the traditional investment account securities like GBTC. I have heard some horror stories of people having trouble with their Bitcoin, trying to manage the form of it, not being in a tradable security like the Bitcoin trust. So I think for our clients, they don't have an option. We're not opening up Coinbase accounts for our clients.
Yeah.
But for investors who want to go that route, avoiding the price premium, the varying price premium on these crypto trusts is quite a bit of motivation. Yeah. But I think for many investors, there's more comfort having the exposure in their traditional investment account.
I'm just freaked out that I'll like hit the delete button, like all my coins will evaporate, like leave it to me to just press the wrong button. And that's like in the back of my mind. Cause I was born into like a risk management, family, my dad's an insurance agent. And so, I always think about like the 99 things that could go wrong, not the one thing that could go right. And that's the biggest part that just completely freaks me out about is the storage of coins, especially as the assets, get bigger and bigger as the more money that you have invested in cryptos, there's more at stake. And obviously there's more risk from the perspective of this outlier that someone steals your coins or you accidentally lose them.
Well, we always like to remember that the position sizing decision is critical, especially with extremely volatile asset classes. So if the investor is starting off with a 1% or smaller allocation, these issues really aren't paramount early on. As the position grows, it's a bigger concern. But the initial 1% allocation in a traditional investment account is a very comfortable way to tiptoe into these securities.
Well, Dave, it's been great with this fireside chat with you about cryptocurrencies. I look forward to continuing the discussion. There's a lot of other things that we have to get into. And like I said earlier, my experience with cryptos, I opened up a Coinbase account several years ago and have dabbled in and out. Not recently, but I did it more just so I can understand how the market functions, how it works, how to enter orders. And I got to say, I'm fascinated. I'm fascinated by cryptocurrency just because of what it means and represents beyond just protecting your buying power and guarding against inflation, but also the technological applications of cryptocurrency, which we didn't even get into in today's discussion. And I definitely want to get back to you at this because there's a lot to discuss. A lot of companies beginning to embrace cryptocurrencies, companies like PayPal and Overstock and so forth. So this is going to be a conversation that we continue if it's okay with you.
Absolutely. We're big fans of Overstock. We've got a big position there. And the cryptocurrency trend is just one example of the powerful dividends that we get from artificial intelligence and the growth in technology in general. So it's just another reason why the NASDAQ 100 and TQQQ is another great security for investors to keep an eye on.
Thanks, Dave, for taking the time. I'm Ron DeLegge with ETF Guide TV. Be sure to subscribe to our channel. How have you enjoyed our fireside chat? Let us know what you think, and we'll continue putting out the content and helping you to make better, more informed, and hopefully more profitable investment decisions. Follow us on Twitter at ETF Guide TV, and be sure to post your comments below. Take care. We'll catch you next time.